For the past 2 months, the stock markets only knew one direction: down, down, down. In this video, we are going to take a look at what exactly we should be doing now as investors in these markets. Hello and welcome. My name is Peter B. and I welcome you here at My First Million, where we are achieving our financial goals together. Yes, as said in the introductions, we are going to take a look at what to do exactly now in these markets. And also we are going to take a look at how long of a period are we looking at, how long it still could be troubles in the markets, which will then help us to be mentally prepared what is ahead of us and take the right actions accordingly. So let's take a look at the stock market chart first. I pulled up the S&P 500 and you can see here that pretty much since the beginning of August, where we reached a peak, the markets have been going down. So on average we lost around 8% so far. However, depending on what companies you have invested in, this might be much different. So if you are just investing into an ETF, which is covering the S&P 500, since the beginning of August, you have lost around 8%. However, there are companies who are performing better than the markets, as always. So for instance, Walmart is pretty much flat over the past 2 months. Then another example here, Google. Google, compared to the beginning of August, is even slightly up. So in order to go down 8% as a whole market, and we have some companies outperforming the market, this means we have in contrast other companies who are underperforming the market. For example, here we have Apple, and interesting to see, many of the companies that we are taking a look at pretty much saw a peak at the same time. So at the beginning of August until now, at the beginning of October, Apple lost nearly 12%. So a bit more than the markets. But there are also other companies who did much worse than that. Like for instance PayPal, who lost 24%, or Walgreens, which lost also around 24 to 25%. And I want to be very clear here. These companies that I have been showing, or the stock market as a whole, is not any investment recommendations. It's just picking some examples of some companies that you probably commonly have heard recently in the financial news. So don't take this as any investment device, but just as examples to make the point here of the video. How long can we expect now that the stock market is going down? So in a short-term perspective, it looks like it's falling since 2 months. However, if we zoom out a little bit, going to a 5-year time horizon, we can see that basically right at the end of December, we reached a high, the peak. And then, since then, we are pretty much down. So even at the beginning of August, we didn't overcome as a market as a whole the peak that we reached in December 2021. So for nearly the past 2 years now, the stock market overall has been down. It went down significantly in 2022, recovered nicely this year so far, but now recently we saw a lot of weakness. So what does this mean now for us investors? It probably means that we are in a weak market environment where the stock market is not doing very well for a period of time. And we have seen those periods in the past. So what is the best thing to do for us now if we know that the markets are weak? So for this, let's take a look at the longer time scale. So this chart here is covering the S&P 500 over the past 40 years. And we can see here that in the year 2000, we reached a peak and it took us nearly 7 years to recover. So from this top here to the bottom and overcoming the previous top, it took nearly 7 years. Also then, in 2007 we reached another peak, and again it took quite some time to recover again. So it looks around again another nearly 6 years until we recover. So compared to that, our recent peak is just around 2 years in. Will it take another 6 years until we overcome the last peak? Nobody can say for sure. It could be very soon that we are already getting out of this down market, but it could be taking another few years until we are in an upward trend again. However, what is especially painful for all the newer investors here, who just started out maybe 2 or 3 years ago in the market, they see a lot of red in their stock portfolio because they bought into the peak and right before the market is crashing. However, the nice thing to know is every time when the market has been crashing in the past, it recovered earlier or later. So actually these times here, in 2002 and 2009, these were the times where you wanted to allocate more of your money into investments and take the opportunity to buy stocks for cheap. Of course, most likely an investor is not able to catch exactly the bottom of the market. So it would have been very difficult for an investor to really time the bottom of the market. For instance, who would have known in October 2002 that this would be the bottom of the market? Again, who would have known in March 2009 that this would have been the bottom of the market? Nobody could tell for sure. However, you could buy throughout 2001, 2002, 2003 and even 2004 and get good prices for the stocks. Also the same, you could maybe start buying in 2008 already and then continue buying 2009, 2010 and even 2011. And you also could build up very nice positions in some good companies or in the stock market as a whole overall. So as an investor into the stock market, you need to consider 3 things, exactly 3 things. First, are you willing to take the risk investing in individual stocks? Or do you want to sleep a little bit better and therefore diversify your money into the whole stock market? So considering this, we have seen the differences here. Since August, the whole market is down 8%. If you would have picked the right stocks, you may be even up. However, if you're picking the wrong stocks, you're down much more. So if you're investing into individual stocks, your risk tolerance needs to be much higher. So you really need to understand this and ask yourself, how much risks are you willing to take in the short term? Then the second thing that you want to do is to plan your capital allocation. You probably already have an investment portfolio now, and you still have maybe some cash on the side. So now that the market is going down, you want to make a plan. At which point are you willing to invest more of your money into the market? You could buy everything at once, or you can do smaller purchases over time and therefore distribute your time allocation over time. That was the second thing that you want to do. Now to the third thing that you want to take into consideration now already. You only want to invest money that you can invest for the long term, that you don't need to have soon. So if you plan to do the investments now, maybe you will run out of this kind of cash position soon. Or maybe you already don't have any cash on hand now. So what do you need to do then? The best thing that you can be doing is optimizing your wealth cycle. So what is the wealth cycle? Exactly this thing here. The wealth cycle is the very basic concept of personal finance. You have your earnings minus your spendings equals your savings, and then you will use your savings to do investments. And of course, over time, you hope that you will generate a rate of return from your investments so that your investments can help you to boost your earnings. So as the market is down and your investments might be also down, you want to especially optimize the first line here. So you want to either improve your earnings so that you earn more. So this could be a side hustle, try to make progress in your career, that you get a promotion, maybe switch jobs if necessary. Or the second thing that you could be doing is decrease the spendings. And this is probably even easier to do. Try to be more frugal for the upcoming months or few years. Maybe don't go to the vacation that you wanted to go next year and wait a little bit longer. So that the goal is to really boost your savings as much as possible. So that you have more money that you can be investing during these down cycles. So in times like this, these are the three things that you want to do. First, understand your risk tolerance. How much are you willing to invest into individual stocks? Or is it better to invest into the stock market? Once you know that, you can try to go to the hunt for getting good bargains. Second, you want to plan when to allocate your cash positions into the market. And then third, in order to have more cash available, now it's the best time to optimize your wealth cycle, improve your earnings, and cut down on your expenses. So what are you doing to take advantage of the market downturns? Please write in the comments below. Thanks a lot for joining me today. I look forward to seeing you in the next video, and especially I look forward to seeing you winning financially.